So Brad Mills sends his
Hello.
apologies. He was really looking forward to being here, but he had to make an unexpected trip to Utah. I think the weather is better here. So these are actually fairly similar panels to combine. I was going to sit down with Brad and Jim, both of who are expert traders going back to the earliest days, and talk about how you sort of look at some of the TAs, I guess as they call them, and read the charts and fundamentals versus charts about Bitcoin, and how you then learn from the history of the last bear market. I mean, as has been mentioned, we had 600 people here last year in the frenzy, and this looks a lot like 2015. Now, we didn't have a Puerto Rico event in 2015, but we did have a Las Vegas event in 2015, and arguably had some of our best speakers. It had like Nick Szabo was there, Craig Wright was there, Trace Mayer, and we had a crowd about this size. And because everybody's like, okay, is Bitcoin ever coming back? And, I think for the most part, when you had people like that, they were showing, really well, we're going to develop here. It was a little bit more technical and infrastructure related. And as I said at the start of this conference, we're the hodlers and the buildlers. Biddlers. And, this is where the innovation comes that powers the next wave. But you do have some fundamental technical analysis. As long as Bitcoin is the kind of the equivalent of the U.S. dollar to the world economy, Bitcoin is to the crypto economy. And you've got these 4-year cycles that, if you do an overlay of where we're at in the market here, it really looks a lot like it did in, March, April of 2015. And there was also, back then, ICOs were dead the first time. Everybody looked at Ethereum and said, well, you're never going to see one of those again. And there was really, I'd say, the first half of 2015. I mean, I think storage, which you were co-founder of, Jim, I think that was one of the last ones to go out in 2014 before sort of just people are looking at their $150 Bitcoin. They're going, hell, I ain't going to put something in an ICO. And Ethereum, of course, after their 30-cent crowd sale, took over a year to launch. And so, it didn't come out and start trading until the very end of 2015. Yeah, about the end of 2015. And really the first ERC20 token that then came out was Augur. And, between Ethereum trading and Augur then doing an ICO, that kind of kicked interest into the ICOs being possible again. And it was amazing that somebody could go out and raise $5 million again, And Augur went from 40 cents a token to a peak of $90, so pretty good return if you sold at the top. Still today is like $12 or $13. And, that really was the start of kind of both the market coming back in Bitcoin, because technically you could see that the market had gone from bull to bear, even if it was kind of sideways motion for quite a while. And then you could see that also that there was some faith in new innovation in tokens. So here we are again, guys. So I'd like our panelists to, give a little bit of their background when they made their first crypto investment, and, where do you think we're going the next 1 year, and let's say through the rest of the 3-year cycle, 4-year cycle? Brett.
Hi, great to be here. Let's see, so I made my first Bitcoin investment in 2011 when Bitcoin was at about $8. It was actually, I paid exactly $8 a coin. And then I read the white paper, I got really excited. Oh wait, should this be quick or I don't know how quick?
No, we're good. We're good.
Okay, good. So yeah, I got excited. Went out and bought some mining gear. It was graphics cards at the time. Worked out the calculations. Oh, I can be profitable, all this stuff. And then Bitcoin shot up to $30 a coin, and I was like, oh my God, this is crazy. And then it crashed down to like $2 a coin, and I was like, oh, I got Ponzi'd. It was it was awful. This was a scam. And so I rode through that. That was sort of my first big boom and bust in Bitcoin. And I actually lost. I think I lost all of those coins because it's a long story. People say, oh, how could you have done that or whatever? But I think I mined some coins and whatever. But like my first purchase was eight Bitcoin for $8. And so I paid $64. I was like, all right, I'll throw $64 at this thing. And then I spent a day like setting up a full node, and you're like, okay, what is all this stuff? And then you see it, and guess what you get to see? It was all command line, right? And I just see like, okay, 8, your computer shows you have 8.0 of these things. And I was like, this was so, I felt like I just got ripped off. I was like, what the heck? This is all it can do? You have no idea. And then later on, Mt. Gox comes around, and I'm like, am I really gonna send in my 8 Bitcoins to Mt. Gox so they can mail me a check for $16 or whatever? No. So, so that was the whole early cycle. And then I've contributed to Bitcoin. I was more excited about the development of Bitcoin, I think. 2014 was really fun year. Bitcoin just hovered around like $300 the whole time. So it was more about, nobody was trying to get rich on Bitcoin. It was more about, what you could do with it, what you could build on it. So around the 2014 time when I bought Bitcoin again, I bought a Bitcoin because I wanted a Bitcoin. I wanted to use it. I wanted to play with it. I wanted to build things on it. And so it didn't matter to me. Like if it went to $1 again or whatever, that's okay. And anyway, I don't know, I'm sort of rambling here, but I'll pass it. Yeah, so that's my general advice to investing is that if you're looking long term, I think it feels a lot more comfortable to hold the amount of Bitcoin that you'd be happy holding, even if it went to 0, right? Because then you're never really anxious, and because it is a very price volatile asset, and that's sort of been my strategy ever since that first boom and bust when I got really caught up in the price. And I'm a lot happier. The amount of Bitcoin I hold, I'm happy with it. And if it goes, whatever price it goes to, if it goes to 0, I'm happy. I'm comfortable with that.
So there's a lot of hodlers and a lot of traders, and the traders probably take more antacids, but probably are worth more money because obviously the correct thing to do in hindsight was sell at 30 and then buy at 2. Jim, we're moving to you.
Hey, my name's Jim Lowry, and I've done kind of a lot of different things in crypto. So I started off as a cryptocurrency miner because I was only taking home like $3 grand a month from my job, and so I
this was which year?
Like 2011, and yeah, I read about Bitcoin in like 2010 on like Wikipedia, and I knew about, from information privacy law, some backgrounds in law, I knew about like e-gold and Liberty Reserve and attempts to have government free money that could be used across borders without using banks as intermediaries, and I was familiar with those cases and how they went down. So I was doing research on that for a criminal law case that I was working on, and came across Bitcoin but at the time it hadn't been, nobody traded it. There wasn't an exchange or anything. So I kind of just glossed over it, and I was like, oh, there's like 100 people on this forum, and this is never gonna go anywhere. So then I read about it again when it was like $30 a coin, and then I looked it all up, and I spent time looking at it, and I was like, I can't believe this. I missed out on turning $1,000 into $1 million here. I could have just bought some coins for pennies. And So I was really mad at myself, and so I went all in on my credit cards and bought a bunch of mining equipment, built because I knew how to build computers. Yeah, so anyway, that's how I got my start. And then I took the money I made from mining Bitcoins and put it into like some ICOs and did my own ICO, which is basically like a way to make more ICOs so I could invest in.
I do remember, though, in the early days, and by the way, you both live in Puerto Rico. That's a cool thing. And Jim, actually, I think you were maybe the second or third person to come down from the crypto space. Yeah. I think it was me, then Owen Gundon, then you.
Yeah, it was. I remember you convinced me to come down here, and yeah, I thought, woohoo, I'm saving 20% on capital gains tax, but then the price of Bitcoin in 2017, I mean, it was up or down 20% like every month. It was crazy, mostly up. So.
I actually remember a very inspirational story of you basically, kind of having the vision that when it was $200, that it was going to be much larger in the future, and basically saying, I'm not selling my Bitcoin at $200. I'm going to go and you're a lawyer by trade. You're out, your other lawyers are out, eating at fine restaurants. You're eating peanut butter and jelly sandwiches so you didn't have to sell your Bitcoins, right?
Yeah, I did that twice. So the first time when I first got into Bitcoin, I opened up a Newegg account and an Amazon account, and every credit card account I could get, and I had it all timed with multiple different windows, so I could hit the credit system, and they wouldn't catch up with each other to get I got as much as you can get mining equipment, and so I was paying like 15-20% interest on the mining equipment, and then my electricity costs and everything just to get Bitcoin, and then it went from like $20 when I mined my first Bitcoin down to like $5. I switched off my miners when it dipped to like $4, and then it proceeded to go down even more. So I turned like all the credit I had into like 10% of what it was worth, and then anyway, so after all that, I wrote it down again in the next market, but I was trading that time on the way down in 2015, and I actually insulated myself from losses I noticed that the altcoins were outperforming Bitcoin. Like I had some MadeSafe coin, traded some Ethereum and stuff. This market, that's not what it's doing now. This time around, it seems like the altcoins some of them are outperforming recently. Like just in the last 3 months, you got Binance Coin, you've got Litecoin, both showing kind of a bullish reversal potentially, or a bear market rally. But they've reclaimed a lot of their losses since BTC was at the 6,000s, and so BTC was in the 6,000s, and it crashed down to like 3,100 in a real short span of time. And
because of the Bitcoin cash fork that really, I thought we were riding a bottom there. I mean, you had a sextuple bottom test at 6,000, and the only thing that broke it was when Craig Wright came out and said, "I'm Satoshi, and I'm going to like dump all my coins to make sure Bitcoin gets killed," and all of a sudden you're cut in half.
Yeah, and you never want to be the guy that dumped all his coins until you're the guy that decided to dump all his coins. And I'm sure that if I went digging around, I could probably find a Bitcoin or two here or there, stashed away. But I mean, I sold all my coins, man. And that's, talking to one of our fellow guests here and about.
So you sold them all in December then?
On the schedule, it says crypto investing in a bear market. Don't. Next question, but it's more complicated than that because I was following, an asset allocation strategy, and I think it would behoove them to do this, where you have to decide which asset classes you're going to invest in, right? So you've got your stocks, bonds, real estate, gold, silver, and now crypto. And I think you don't want to overlook this asset class because it's the best performing asset class the last 8 years, or the last 5 years, or the last 4 years. It's blown everything away. The only time it's not the best performing asset class is in the last 18 months.
Right. But this is, I mean, are you seeing the cycles repeat? Do you think that we're going to have another all-time high in 4 years after the last all-time high, or are you just kind of like out and just not in the game anymore because you made enough money to retire in your 30s?
Not going to stop watching the market, and I'm not all out. You know, I did sell all my coins at one point, and you know, then it went up more, so I bought back in and wrote it up, and then I sold all my coins again, and you know, eventually you for me anyway, I decided to say, okay, I'm gonna put, you know, for me it's like 5 or 10% of my money into crypto, and yeah, when it goes down like 80%, that's where you have to look at yourself in a bear market. You're like, okay, so first it goes down 50%. So that 10% of your money you had in crypto, 10% of your retirement account or your rainy day fund, whatever you want to call it, whatever account you're sort of investing with. Well, now that's 5%. So you have to take 5% from elsewhere, you know, sell some stocks and bonds and real estate and whatnot, and buy crypto again. And then it goes down another 50%.
So you try to cost average it then, right? So in other words, when it's down, you move other things in to sort of make sure you're always at that percentage. Which I've seen as a strategy in the stock market as well for portfolio balancing.
Yeah, I mean, if you're going to, you know, I mean, I'm not going to share all the super secret trading tricks. And
That's what you're here for.
But I think for almost everyone in the space, I mean, you've seen a lot of, I know we had to talk about treasury management for blockchain projects earlier today, and you're treasury managing your own blockchain project, which is like, how do I, you know, be around for the next Bitcoin bull run or Ethereum bull run? I mean, that's the other thing. You got to be diversified. And so when you're in a bear market, you got to protect against continuing losses by limiting the percentage allocated while keeping in mind that whenever the bear market bottoms and rallies again into a bull market, which could happen rather quickly. I mean, if you look at what happened with Binance Coin or Litecoin or Ethereum in the last 3 months, 2 months, it's, you know, you don't want to miss that kind of action.
Yeah. So obviously Bitcoin tends to have a little bit longer, slightly more predictable trends. And even though everything else tends to follow Bitcoin to a certain extent, you're right. There have been some, like, you know, just wild rallies within this sort of sluggish Bitcoin market. And it seems like the altcoins are in 2 or 3 camps. There's the ones that have great communities behind them, whether they're even functional or not, but they've got obviously trading communities behind them, like Binance. And then you've got ones that just seem like they're down 90% and they're going to go down another 90%, and there just doesn't seem to be anything. I mean, do you see basically anything that's not rallied recently just dying?
So you're asking which coins are going to live and which are going to die?
In categories, yeah.
I mean, it's you know, I feel like the best way for an ordinary investor that isn't going to be doing like a personal conversation with coin founders, or at least an online sort of deep dive research, which is like everybody, like hardly anybody, I mean, does that, is to just use some form of index investing where you have a spreadsheet and you input the market capitalization of the coins and you have it calculate the total market cap, and then you divide the market cap of the coin by the total to give you a percentage, and then you multiply that. You do some spreadsheet stuff, and basically, I have a spreadsheet that just tells me how many of each coin to buy, and I update it, and I weight them a little bit. Like, I'm underweight Bitcoin because, you know, if you want to define a bear market and a bull market, and you're using U.S. dollars as your base currency, then yeah, Bitcoin's still below its 50-day moving average. It's below its 100-day moving average. It might be around its 50-day moving average. And
that's
now.
What, the bear cross?
Yeah, so if you look at the 50, these aren't really magic or anything, but 50 days, 100 days, and 200 days simple moving averages do tend to have a pretty strong trend indicator, at least on the way up. It was pretty useful.
And I think the 50-week and 100-week just crossed, and it was the first time in 4 years, and that ended up being where the market turned around 4 years ago. And it's literally, if you do an overlay from 4 years ago, it's scary how much they're looking alike. So the question is, are we going to then move up between now and the halving and then have some kind of parabolic rise the year after the halving, which is what's happened 2 out of 2?
And the last time there was a turnaround, if you recall, it happened in the altcoins first. You know, they sort of, and nobody noticed because that was back whenever Bitcoin dominance was at 90+%.
Right.
So all of the altcoins put together were worth 10% of what Bitcoin was worth.
Right.
Which, when you, there's reasons for that, fundamental reasons. The security of the network back then. Now you have comparable security in terms of a single state actor or a large corporation not being able to fire up enough hash rate in secret to do a 51% attack.
Although it just happened to Ethereum Classic.
Yeah, so Ethereum, I would say, is in that category. Litecoin's in that category. Bitcoin's in that category. The proof of work coins. And then the proof of stake coins seem to be holding their own quite well. But that's not as proven. We're not exactly sure. There might be some unknown attack vectors there. But if you have the ability to send money, or send, you know, like, why is Litecoin worth less than Bitcoin? They both do the same thing, but Litecoin does it quicker. And people used to say, well, it's you know, somebody can just 51% attack it. They just spend, you know, 10% of the market cap of the coin on hardware, and they just, you can't say that anymore. Mm-hmm. They've got ASICs, you know, and there's enough of them, and you know, it's not impossible, but that's something you need to watch out for. I know a lot of people have their favorite coins, but me, I'm looking at it like, okay, Litecoin's not in a bear market anymore, really. I mean, it kind of is, but how do you define bear market? I mean, it's up about 80% from its lows. On pullbacks, it's making higher lows. Mm-hmm. It's making new 3-month highs. It's above its 200-day moving average. It's above its 50-day moving average. It's above its 100-day moving average, if the 50 days above the 100-day. But, you know, the 200-day is still trending down. The 100-day is still trending down. So it's still entirely possible for it to retest the moving averages on a pullback at a lower price than you bought on a crossover.
Right.
But yeah, I mean, there's no magic, you know, book somewhere that says that Litecoin isn't going to be worth more than Bitcoin someday. It just probably won't, because, you know, the momentum is such that there's already so much volume in the Bitcoin. But you got to watch out for that, because what happened last time, there was a big bull run. Bitcoin dominance plummeted from like 90% to, you know.
But you're right. Even at the peak of Bitcoin price, it was under 50% because there were so many new coins that, you know, sort of followed the whole ERC20 boom. And by January, when it hit $800 billion, I think we were down to like 30-something% for Bitcoin, because they were also having the scaling wars. So news and fundamentals, we're probably getting a little too technical right now. But so I'll have you pass it over to Nithin and talk about when you got into Bitcoin first, and how you sort of see the virtues of patience, or the versus the aggressive trading stance in terms of ways of preserving capital and making new money.
Okay. So my background is tech. I was a tech developer. From there, I went to Wall Street. I was first building trading systems, then I was a trader. I was a market maker, so the desk that I was dealing with, we were doing $4 billion a day. So we were trading volatility. And then I got out of it, means I was laid off in 2008. After that, I went and played poker. And while I was playing poker, a guy reached out to me and said, could you build this system for me? I said, sure. If you can give me a vendorship in your company, I will build it. So I built a software company out of that while playing poker. And when this happened in 2011, so I'm an uber libertarian guy. I believe there's no need of government and we need sound money. A very good friend of mine, he's in Puerto Rico right now because he invested a lot of money into Ethereum at that time in the crowd sale. He's not come here, but he told me, you got to build me an exchange. And I was like, what the heck has happened to my friend? He's coming and telling me I got to build him an exchange. I'm like, for an exchange, you need a lot of money. You have to worry about, compliance. He's like, no, this is a different exchange. And he tells me about Bitcoin. And at that point, I'm thinking my friend is really stoned at this point, okay? Because, so he's explaining to me you can do this. And I'm like, how can you do it without a third party? Because I'm a computer science guy. And when he's telling, so I didn't read the paper at that time. And he's telling, I'm like, boss, you're going to go to jail, I said. And eventually, so I've been following it. But then when the Mt. Gox and all went down, so I call him and tell him, see, this is what I tell you. Somebody is going to go to jail because you don't know how the power of the New York Attorney General. But then I'm looking at the price. And then I started plotting the price out. So 2013 happened. I'm watching it. By the time it's 2015, I understood one thing. So I'm a trader by profession, investor and a trader. I understood one thing. It's a weak table. So I started relating it to poker. It's a weak table. I understand trading better. I know how to make money. So I start trading it. I'm making money. Then I read the paper. The moment I read the paper, I got it. I was like, this is the future. Then I went and convinced my wife. I said, we got to sell everything. I'm going to stop trading. So I convinced her, we sold, we had rental homes and all those kind of things. We took out of 401k, we paid the penalty on it, and we invested all into Bitcoin. I convinced her, I told her, this is it. This is the big bet. This is a chance in our life. So when it comes to that, there are two reasons. I'll tell you why I did that. So it's based on goals and beliefs, okay? So if your goal is capital preservation, you got to trade, you got to make sure you have a well-balanced portfolio so that you don't lose money. So my goal was like, so if I have $100,000, if I do a balanced portfolio, I'm going to make $110,000. If I have $1 million with me, I'll make $1.1 million in a year. And if I have $10 million with me, I'll make $11 million. But my goal was like, I'm going to ride it. I don't want to be that guy who was trading Microsoft. I want to be that owner of Microsoft. And I have a chance to own something without really building because somebody else built it. I just have to believe in it. So I decided, okay, I'm going to hold Bitcoin. After that, I decided I'm not going to trade it because the problem of trading was when you trade, you're trying to scalp it. Actually, that's what you're trying to do. You're scalping. You're trying to make sure you don't lose much. You make a little, you don't lose much. So when you do that with Bitcoin, the problem was Bitcoin was jumping like crazy. So every time you would miss the up, but you would always get the downside though. All right, so I do that. So I got it. So very quickly I said, I'm going to hold it. All I had to do was hold it and believe in it. And then I decided, okay, from the tech side, so there are these things. There's trading and investing. I moved from trading to I decided I'm going to do a long-term investment. And I'm not going to touch it, or I'm just going to maybe allocate it depending on how the ICOs or the new coins, the altcoins are going to come out, how they're going to play out, basically. There was no altcoins at that time. It was nothing, as Jim was saying. There's really nothing. And then I decided the real money is going to come in services. You can be PR, marketing, a tech provider. So I can't do marketing or PR. There's no way I could do that, but I could provide tech. So we started training developers to be Bitcoin, blockchain, Ethereum developers. When there was nothing, nobody was going to pay us for that. So we invested very early. That really paid off in 2017 when all these ICOs happened. Because all these guys raised money, somebody had to build it. So my tech company got paid on that end, which turned out to be great. We have 300 developers right now just doing, and it's not like the Nick Szabo category kind of developers. We're not going to build the next blockchain. I know it. The guys know it. The only thing that I made them understand is, listen, you're doing a great service. This is what we do. We just have to consistently do that service, and we'll all do fine. And on the investment side, I'm making a big bet. So if the investment goes south, that's what I told my wife. That can go to zero. Keep that in mind. But I'm willing to take that bet because I believe in it. And nowadays, I spend my time going around the world. I try to educate people on why they have to come into crypto because I believe that adoption is going to help not only me, it's going to help people, and it's going to help the whole space. And I spend a lot of time doing education, like to really people who don't know. Like, I have spent, I don't know how many Bitcoins or Ethereum, it's only in points, it's in decimal points. 276 people over the age of 60, I've taught them to have a wallet, I've established their wallet, send them something, and many of them have gone on to Coinbase and to all these OTC desks, and some of them have bought in millions, actually. Because some of them are very rich people, and they did multiple millions, like 10 million plus, they were doing trading. So I do spend a lot of time on that because I believe in adoption. So nowadays I spend time with founders. I try to see which project really makes sense. I help them out from an advising, mentoring, consulting, and also as an investor. I invest in these projects if it falls within my thesis of increasing adoption. Oh, I know it's too long, but this is the story short, actually.
So, where do you see? Sorry. Oh, sorry. Sorry. Where do you see this pacing? I forgot this thing's not following me. So where does everybody see the price of Bitcoin end of the year, end of 3 years, and any other observations, and then I'll turn it over to the rest of the crowd.
I forgot to answer that one. I thought you had. Okay, so I don't look at the price on a daily basis. I don't look at it anymore. For me, the whole thing is either I'm going to zero or I'm going to see it at maybe 100,000 or a million. So I'm not going to sell it till it at least touches 100,000.
Okay.
I'm not going to sell it. So in the meanwhile, it could go to zero, and I might be left with nothing because I'm not going to sell it on the way down also. I wouldn't suggest that as strategy for most people. Unless your goal is like mine. My goal is, listen, I want that 1,000 or 10,000x. And in between, I don't want anything in between. I don't care if my wealth is preserved or not. I'm looking at that 10,000x. So if your goal is that you want to preserve it, you have to think about price, try to get out. But I don't have a prediction of price. I just believe in the network. I believe in people. I believe that we are meant for decentralized structures.
Jim, you're not a hodler, you're a trader.
Well, I hodled for,
when the price was down.
yeah, I hodled.
And when it was sideways action.
I hodled both ways, and I was with him at one point, and honestly, you're right. I missed a lot of upside. If I would have just never traded and just hodled, probably be better off. But on the other hand, I hodled enough. So you hodl enough. And where is the price of Bitcoin going to be at the end of the year? I think, like I was saying earlier, it really depends on whether or not these trends in market dominance, divergence hold. So Bitcoin could easily be at 3,500 at the end of the year, but that doesn't necessarily mean that Ethereum, Ripple, Litecoin, are going to be at the prices that they're at the end of the year. So I don't know. I'm looking at the index. So total market capitalization of all coins is at about 130 billion now. Mm-hmm. Maybe that was the bottom moment. There was about 85, 90. I think it dipped down to like 95 billion. Yeah, like 90 billion. So I think at the end of the year, I think that we're probably going to be looking at higher than we are right now. So let's say 150 billion.
Okay. And how about 3 years, which is sort of the traditional high of the 4-year cycle, end of 2021?
Back to $1 trillion, baby.
All right. And Bitcoin?
I don't know. I mean, all coins added together, in like 2022, yeah, easily could be $1 trillion.
Okay.
Which coins are going to be worth more than others? I'm not going to play that game anymore, man. I'm just going to buy the index fund.
Buy the index.
The only thing, besides the market cap is, I take out a lot of those coins because some of these coins have a huge market cap, but there's no volume in it. Okay, so I really take those guys out of the whole thing, because the ones without volume, like let's say I have, like I think James was. Monero is a good one.
Yeah, Monero's like ranked 10.
Yeah.
It's a huge outlier in volume. It's got $25 million a day in volume. The coins on either side of it on the top 10 list, they've got like hundreds of millions.
There's an old saying, what is money? Money is a matter of these functions for a medium, a measure, a standard, a store. If it has no medium of exchange because there's no volume, then it's not even.
But the store sometimes can be good too, right? The store itself can be so powerful. Like gold is just a store, but it's so powerful that even if there's no volume, it can still survive without a problem. So sometimes there's. But end of the day, see, money is social consensus. It's our collective delusion or whatever that word is. We all together decide to give it value. And whatever is the one everybody around us is giving value, we are going to give value to it. And the volume, I look at the volume also, just market cap alone, because there could be some coin who is 1 cent. They have 10 billion coins or 100 billion coins out there or a trillion, and that might. So
you're taking the delusion of a piece of plastic or pieces of paper or a wallet, and then paying for the delusional price of a bottle of wine, a piece of art, or a Rolls Royce.
Because it is delusion. Like the prime example is that collective delusion is that Iraqi dinar. When after the war, and they had the Swiss dinars printed. And after that, Saddam said, no more Swiss, we're going to issue a new currency from the next day. But the Kurds started using this old currency. So all of them together decided to give it value, even though the government itself said that we're not.
And tomorrow morning, one of our keynotes is going to be Harry Dent, who's written many books. He's also lives in Puerto Rico. He wrote The Roaring '90s. His current book is called Zero Hour, and he's going to be talking about when this overall economy is going to go pop, 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 and what that might mean for crypto. I think are we all in agreement that the overall economy is a little overheated right now and over-leveraged? Anything about, because there's a lot of divergence of opinion whether the overall economy even matters to the crypto economy as long as the U.S. dollar is doing well. In other words, we could go and have a 70% drop in the stock market, and it might actually hurt crypto because people fly to the dollar. Any thoughts on this? Anybody?
Well, yeah, so I didn't get to give my price prediction either.
Oh, and your predictions, please, yes.
But yeah, I mean, I think, so I think that it's very hard to predict, obviously, price. If you know anything about chaos theory, like if you have three couple differential equations, you actually cannot, it's the definition of chaos, predict price. But we know that price is always a function of supply and demand. So one of the things that I'm most excited about is that with Bitcoin, you can actually track all the UTXOs. So Unchained Capital has done some really good research on heat mapping the age of all of the Bitcoin, and you can look at that on their website. They call it the HODL wave. And so I track when you get to the bottom of the HODL wave, and that's basically like the percentage of people that is hodling their Bitcoin over the year, which is a really strong indicator of basically the available supply. So we don't know what the demand is really going to be for Bitcoin. The demand can be, driven by hype or a use case or whatever, but at least you can actually focus quantifiably on one side of this equation, right? If you're trying to predict what the price is going to be. And then on the other side of things, I strongly believe that within, say, 20 years, the GDP will probably be about 10 times what it is today, and it will be largely driven by machines, and many of those machines won't be able to get a bank account, so they're going to prefer to get payment in crypto. I'm picturing, maybe within the 20-year time frame, the total market cap of crypto will probably be about 10 times today's GDP, somewhere around there.
10 times today's market cap, or 10 times
today's? Yeah, I guess the market. I mean, yeah, I guess it's hard to. Yeah, you have the market cap. I think 10 times the market cap, and 10
times the GDP would be trillions.
You're right, the GDP. But then also on the 5-year time frame, if you're trying to quantify this in dollars, there's a good chance the dollar will fail. And so then what is a Bitcoin worth? Is it worth $1 million, $1 billion? What is it? Why would you measure it in dollars anymore at that point?
If the dollar failed, you couldn't even measure it in dollars.
Yeah, right. So
questions so we can get along to our final speaker then. Questions? You got trading experts and old-time,
Nobody wants.
you know, I consider an OG in Bitcoin to be anybody who bought their first Bitcoin before the first halving, which is November 2012. I missed out by a few months. No questions, or they're going to wait for the cocktail party and ask some secret advice and secret handshakes?
I can tell you what shitcoin to buy. No.
Shitcoin blues.
No. All right.
All right.
No, I can't. I actually can't. No financial advice. This is not financial advice.
Not financial advice.
Okay.
No, just.
All right.
Okay, fantastic. We'll thank our panel. And is Prayer here? CoinMint? All right. Come on up. Okay, so our final speaker is special treat here. I think a lot of the audience is out at the beach right now, but those who are sticking around get to see the most ambitious company in Puerto Rico, and really one of the most ambitious ones in the blockchain space. Have a seat. Nice to see you. Sit down here and just each take one of these mics. Fireside chat mode. Okay. Testing.
Hello, hello.
Hello. All right. Okay, so almost at the end of day 2, and obviously don't go anywhere before the buses leave. At 5 o'clock, we're going to be going to our legendary dinner. For those of you who have been to prior CoinAgendas, we always, the middle day, have a special dinner in a special location. Last year, we actually rented out the entire Antigua Casino and had a 17-piece jazz band, because we had 600 people at the conference. And 60 ICOs are presenting. That was before crypto winter. You'll notice here we have a little bit more of an STO, and I think, I don't know, it seems like about 1/4 of the attendees worked at NASDAQ at some point. So obviously, it's one of them walking the door right now. So it's a different world. It doesn't mean that the world won't change again in a year or a year after that. But one thing that has certainly been constant has been that you do need to mine to get Bitcoin. And so that has been, the way that a lot of the wealth in the crypto space has been generated by early miners and by miners that were able to go and find the best bang for the buck in terms of location and technologies. And brings us to... tell us a little bit about how CoinMint got started. I met actually Ashton when he was still an energy trader and just had gone into kind of this idea of Bitcoin mining, and all of a sudden you guys got one of the most ambitious projects going on in the world.
Yeah, so, it's loud. So I came from the commercial data center space. And, I've been kind of, was on the periphery of Bitcoin and digital currencies for some years, just kind of looking for a way to go in. My traditional commercial data center business became, more difficult, so I was looking to segue to do something, and started doing some mining on a smaller scale in upstate New York, hooked up with an old friend of mine, Ashton Soniat, and we started with a 500 kilowatt site in Plattsburgh, New York. Worked very well. We soon upgraded from 500 kilowatts. We jumped up to 2 megawatts. Then after that to another site in Plattsburgh for 11 megawatts. And the Plattsburgh Municipal Electric Company said, guys, thank you very much for the business, but no more electricity here in Plattsburgh. And so we started searching around the area, and an hour and 15 minutes up the road is Messina, New York. Messina, New York is on the border with Canada, right there on the St. Lawrence River, where about 25% of the world's fresh water goes by.
I used to live in St. Lawrence County when I was in my 20s, so I know the area well.
Yep. So, Anyway, so we found there was a shutdown Alcoa aluminum smelter with a New York ISO direct connect, 435 megawatts, right on site there. And the site was a bit overwhelming to start with. Actually, it's still a bit overwhelming. And we thought it was a little bit crazy, but we took possession of the place in December of 2017. In May of 2018, we energized our first machines there. We're currently running between our two sites, don't have an exact number, in the 40 megawatt range. And we are on a mission basically to build out the entire site. Obviously, with the kind of market slowdown, we had to, sync up with that, and so we've kind of slowed down in terms of our growth. But, even in the past 30, 45 days, we've installed another, 10,000 machines or so. So, we're still growing as we speak, Well,
with nearly free energy costs, I mean, you're in the penny range or something like that?
Low 2 cent range.
2 cent range. Are you still making money?
Yes, yeah, I don't think, I would say, if you cannot mine Bitcoin with competent management, which we like to think we are at least a little bit competent, at 2 cents a kilowatt hour electricity, I think it's fairly safe to say that Bitcoin as a system is no longer viable. If you can't mine it at 2 cents at scale, right. It's I think Bitcoin is dead.
Well, and I was going to say, but it's self-regulating, right? So in other words, I mean, to me, it seems like the biggest challenge is if you have too many people mining, but the price is low, right? Because it seemed like in the early days, when I was working with KNC Miner in 2013, they would literally restrict how many machines they put out there because they didn't want to raise difficulty to be beyond where they had, I think at the time, 40% of the entire hash rate, because they wanted to have just enough so they were getting a lot of it, but not so much that they would like trigger even more. So it seems even with the the beauty of the algorithm going up and down on demand, if you've got flat pricing for a long time, but more and more people are taking cheap miners and throwing them on, and obviously it depends on electricity too. I mean, how many variables do you find that like really, mean that there's going to be very few times that you're not making at least some profit?
I mean, for us, because of we have tremendous economies of scale, and the electrical costs we have. I mean, even right now, to today's date, if you look at our financials from just like a net margin or an EBITDA perspective, the margins that we have today are, on the lower side, the lower side that they've been in the past year. But they're still, if you want to compare them to my commercial data center days, they're actually more than respectable, even in the good times, in that business.
And then I take it you're bullish on the long-term price, like the 5-10-year price, or are you irrelevant to your profit margins?
No, I mean, definitely, the profitability of proof of work mining is the relationship between the price and the network hash rate. I mean, that it is what it is. So obviously, for us, that ratio, our profits increase when the hash rate will take a while to catch up. I was like, if you want to go back to December 2017, we were ROIing on equipment in 4 to 5 weeks. It's amazing. Of course, we would like to see that again, and a big variable, is the price. Me personally, we're not, our angle. There's a speculative aspect of what we do, but we operate our business more like a traditional business, and we've positioned ourselves, hopefully to make money. Irrespective of Bitcoin price. And
do you maintain some Bitcoin, or do you just simply convert your profits into cash?
Yeah, I'm not. That's personally not my end of it in the business. I can tell you that strategy has varied and changed based on market conditions, and there's some folks that are more trading oriented in our organization that done that. I can tell you we have held, we have sold, we played in the option space. And that strategy, is a dynamic strategy that changes according to the market.
And that makes sense. So, one other aspect of mining that I think I've been, warned about coming up for years, and maybe we're at that point, is the growth of hash rate versus the growth of chip development are not on the same schedule. And so what happens after the hash rate, sort of burns through like the 4 nanometer chips? I mean, when's the next development, or is it going to be if price goes up, you just have to make more of the same chips, or make efficiencies within the software?
Right now, actually, for any type of industrial scale miners, it's a very interesting time. I actually, Bitmain is the metric that we use is in the Bitcoin mining world is watts per terahash. So if you want to look at S9s, Bitmain S9s, which make up the vast majority of the hash rate on the network, they're roughly 90 watts a terahash. The new machines that'll be shipping just in 2 to 3 weeks are 30 watts a terahash. Basically, in the Bitcoin world, the entire network is going to need to upgrade to these new machines within the next 1 to 2 years. The folks that don't, they're done. The folks that do it faster are going to have the advantage. So in the mining space, most of the money that's coming in now is actually new money. The guys that are going to win in the industrial mining space are the guys that are able to attract new money today and upgrade their infrastructure.
So I think historically it's usually been that you would, kind of decide on, the profitability of a machine when it is that you sell it out at whatever the market price is, and use that money to then go and buy the next generation. And then, I know for a while there it seemed like it was about every 9 months you had to upgrade. Are the cycles similar these days?
Well, I've been in it personally, and we've been in it for about 3 years. And we first got in it. The benchmark machine for the past 3 years has been the Antminer, Bitmain Antminer S9. That is still today. That's the machine today. Its days are numbered at this point, and
so
clearly
the one
numbered.
that's coming out in a few weeks, is that another upgrade by Antminer, or is it a different machine?
Yeah, there's a few. This is just kind of there's really four or five players now. There's Bitmain, there's InnoSilicon, there's WhatsMiner, there's eBank, and there's Bitfury. Bitmain, it has a 7 nanometer process machine that they just announced the chip a couple weeks ago. I was with them just a few days ago. They say that's going to be in the low 30 watt a terahash range. The WhatsMiner folks are releasing something around May that's like 37 watts a terahash. So they're in the game. If you guys aren't familiar with them, the chip designer who designed the chips for Bitmain for S7 and S9, he left Bitmain, and he's one of the guys that started WhatsMiner. eBank and InnoSilicon purportedly have a competing product. The specs are kind of questionable out there. But so anyway, all these guys have new products that are coming online now.
And let's see, what haven't I asked? So let's talk a little bit about your way of going out and raising money. So you have an STO. Is that an STO for kind of cash flow? Do you pay out in Bitcoin? Is it more of an equity investment? What are the logistics of how your STO is laid out?
Yeah, so ever since inception, basically, the model we've used is that the hash rate that we run in our facilities, it's half owned by the company and half through external participation. Those contracts started out as paper contracts, and basically it's literally you have a contract to where you're leasing hash rate or buying a right to hash rate. About a year ago, basically, we took the last iteration of the paper contract, which is basically a profit share. The original contracts were basically we made our profit on the maintenance fee, and that's kind of been the model in the cloud mining model. But at the beginning of last year, we're like, hey, what happens if basically this structure makes it unprofitable for our clients? And so we thought of a new model, and basically the new model is a performance fee. So basically, we take 25% performance fee of the profit of the mining. So the theory is that as long as we're profitable, so is our client, and we have 100% alignment with them. So we'd say basically that model is you buy the terahash. It's a perpetual right to the terahash. The contract never expires, and it's a 25% profit fee. So it's basically the mining rewards minus the hard costs, most of which are electricity. You have rent and some maintenance in there. And then we take the profit. 75% goes to the client, 25% goes to us. So we took that model basically, and we turned it into a security token. It's an ERC20 token, and it's a very simple model. In the Bitcoin world, one token equals 1 terahash. If you have 1,000 tokens, you have 1,000 terahash or 1 petahash. It's as simple as that. There's a dashboard. You receive your payouts every day. Right now, with security tokens, one of the big issues, obviously, there's really almost no liquidity in security tokens. So that's something hopefully we're looking forward to.
So if I had 1,000 terahash or 1,000 of yours, I would be basically just then getting 75% of what your mining returns are, and that would be paid out in Bitcoin?
Yes, yeah, basically, and the interesting thing how it works is we don't actually ever custody the mining rewards. Your hash power that you basically, your tokens, you register them on the dashboard. We work with Slush Pool, that's our pool partner, and basically the hash rate is pointed at Slush Pool, and you receive basically every day, basically the mining rewards in Bitcoin.
So I know we've talked about this before, but not publicly. We worked to launch the gigawatt token, and it looked all real good on paper, and then all of a sudden they're bankrupt, and and everybody's like saying, "What happened?" And so, could you describe some of the fundamental differences between what they did and what you're doing?
To be honest with you, I don't know a lot about the gigawatt token, other than I believe they were selling rights to electricity or to housing. So I don't think I'm in the best position to compare us to Gigawatt. I can tell you that, our token basically, given that it's performance fee, and we own half of our tokens. So basically, you're in the same boat as us. In terms of, I think Gigawatt's play was more on a US dollar base per megawatt, and, the hosting model for the co-location / hosting model for miners, has blown up in a lot of cases, and that's it. Unfortunately for Gigawatt, that's what happened there.
And so here, when you're saying, because I think there was a 50-year payout or something like that on that hosting, because that was supposed to be the life of the facilities. Your perpetual is perpetual for as long as the company is solvent?
Yeah, it's for as long as it's perpetual for as long as the company is solvent. One of the features, the efficiency of Bitcoin mining is profitability is governed by the ratio between the price, and think of the difficulty level, and also the efficiency of the site. So basically, our token is linked specifically to our Messina, New York site, the former Alcoa aluminum smelter. So basically, you are participating in the efficiency of the electricity and the efficiency of the site as a whole. So right now that site is, for instance, it's around 12% capacity. We've got a lot to build out there. 40 megawatts, it's big, but there's a lot more to go there. That site's running about 90 watts a terahash capacity. That's the efficiency of the machines now. We installed our first next generation machines actually this week. So the folks who bought tokens last year basically are going to be benefiting from the increased efficiency as it goes along. One of the things that's in our model, we have something called the technology upgrade provision, and we will continually upgrade the facility to new technology as it becomes available to ensure our competitive advantage. So that basically that feature is an important part of what allows the token to operate in perpetuity.
And then as a security token, I mean, I know past performance is no prediction of future, but if someone bought it today, about what annualized return are they getting at the current hash rate?
You know, this is an area basically because the market is so dynamic. We
Give
are
me a range.
You know, it's something that's a rabbit hole. I can tell you that historically what it's been. You know, and it all depends on the price that you get in. So if you want to go back to December 2017, that was before the security token, but it was the same model. You know, we had clients that were ROIing their principal in 5 to 6 weeks. You know, right now, basically, it's a considerably longer horizon to ROI. I mean, you're talking, depending on the price you could get in, you're talking, it could be, yeah, I don't want to go, it could be years, it could be months. It's kind of depending, you know, where you're at. Anyone who's familiar with mining, there's a lot of tools where folks can figure that out, you know, on their own.
But you're actually not being, the tools to figure it out are on a single device. You're going to be upgrading the devices for people, correct?
Yeah, but well, you can have a pretty, you can have some guidance basically by, you know the efficiency of the facility, you know the efficiency of the new machines. So there's enough tools out there where folks can figure it out, you know, independently. For us, it's a kind of slippery slope to talk about. So let's just say right now I go and I say, hey, the ROI is this, you know, and then someone comes back and puts the video in my face.
I'm not trying to like hold you to anything, but I'm just trying to identify that it's not like a traditional contract where one machine, when it's done, it's toasted, you go to zero. This is continually upgrading machines based on the whole facility.
Yeah, I can tell you, you know, from obviously we're a little bit slighted, but if you basically want to have, you know, I think it's one of the more conservative ways to get some visibility for new folks that are into the space. Because, you know, if you want to look at it, even the darkest days of crypto when the market went down, I mean, our clients got paid every day. They're not getting paid as much as they want to get paid every day, but we're not either. You know, we're basically in the same boat.
And then the security token itself has an asset as long as it's making money. So, you know, even if the price is, so if your token was going out at $10, I don't know what the price is, but at $10, and it's all of a sudden having like a really nice return on whatever aftermarket it eventually gets to, it would probably be going out at more than $10. In the bad time, it might be going out at less.
It'll be really interesting to see the premium that you know, when there is some liquidity in the security tokens. And so that's one thing, you know, one question I have, like, you know, my end of it's more the technology end. I'm not really the finance guy. But, you know, so our token is scheduled to be listed on Open Finance and the T0 platform, hopefully sooner rather than later. They've given us, you know, a fairly short, aggressive schedule, so let's hope that happens.
And is this going to be like a Reg D, Reg S, or are you going to try to get uplisted to like a, you know, a Reg A Plus or an S1 or something like that?
So again, that's getting a little bit outside of my area, but right now it's Reg D, Reg S. You know, it's a full-blown. We have the
so accredited investors only.
Accredited investors only. You know, we have, you know, started to explore possibly, you know, going the S1, the full-blown reporting route.
Okay. Questions? I'll give you this. Somebody else can hear you.
With your experience in the mining space, I've heard it explained to me proof of work can be kind of like a zero-sum game eventually. And in 2013, I remember reading, you know, price of Bitcoin is going to be $100,000 to $1 million. And it was a really strong argument, but I didn't know enough about proof of work and difficulty at the time to kind of back that into the cost of mining and the difficulty being potentially, you know, something that's going to keep the price of Bitcoin down. I'm curious if you have some thoughts on that. And meaning, why would I spend $1 million to buy a Bitcoin if I can just, you know, spend $900,000 to buy, you know, some kind of facility to mine Bitcoin? You know, we're assuming some high price in the future. And I've just, based on your experience in the space, what are your thoughts on how the difficulty and the cost of mining rigs impacts the eventual market price of Bitcoin itself?
Yeah, I mean, I think it's the other way around. I mean, I mean, there's a lot of people that say, okay, because it costs, I mean, this is just my opinion, say, okay, right now it costs us, for instance, it costs, I think a lot of folks, they say, okay, well, it costs $2,500, that's the average cost to mine a Bitcoin, so that's the true value of it. I think it's the other way around. I mean, let's just say for some reason we're sitting right now and everybody picks up their phones and Bitcoin goes to $50,000 in 1 minute. Who knows? It could happen. What is going to happen in the mining market? Well, the guys who are selling the hardware and the guys who have the data center, their phones are going to be ringing off the hook immediately. And what's going to happen is basically those folks go out there and they're going to buy more equipment. They're going to buy the newest equipment, and the hash rate is going to go up. And at the same time, basically, if you want to look at the hash rate, the price went down a Bitcoin. When it was November, from whatever 6,500 down to 3,500, you can see the hash rate. It went down. There's lots of folks. I mean, I live in Miami. I know folks that were mining with Miami electricity price, which is like 12 to 14 cents a kilowatt hour. Those guys shut off. There's no cooling. Yeah. Well, not cheap, expensive cooling. Yeah. So there's. So that, yeah, I think it works. There's a white paper on the internet, and I can't remember the exact title. I was actually looking at it yesterday, and it's the equilibrium of Bitcoin mining, and it's a fairly academic white paper. It's very well written, and it goes into basically the intrinsic link between the monetary fiat value of Bitcoin versus the hash rate. So that's my opinion, is basically the hash rate follows the price, not the other way around.
Thank you.
So as time goes on, there's more research dumped into proof of stake. Will your company be involved with at least research and keeping up on the latest information with proof of stake? Because that could completely eliminate mining one day. It's not here yet, but 3 to 5 years out, that could be a risk associated with hundreds of millions of dollars of stores going into research into ASICs mining and the hardware that you're standing up.
Yeah, well, this is a debate that people debate for hours and hours about proof of work versus proof of stake. I can tell you we do have some initiatives inside of our organization where folks are playing with master nodes and proof of stake mining. I can tell you, my opinion is, I personally think that there is a place for proof of stake. I don't know if you guys have ever looked at the Dash model, but the Dash model is a hybrid model. Proof of work, also in my opinion, is required to provide the security for the blockchain. So I had an interesting conversation this week with some folks from Consensus, and without going into too many details, one of the things that I gleaned from the call was that Ethereum, basically, who has a stated direction to go to proof of stake, that this may have changed already, and proof of work on Ethereum will not be going away, from what I'm understanding, anytime soon, if ever. So, who knows exactly what the future holds, but in terms of proof of work mining, I don't think it's going anywhere anytime soon.
Hi, good afternoon. Thank you so much for being here. Question I have is, I'm from New York City, and I'm quite familiar with a lot of the conditions throughout the state. How did you work out with New York State in terms of your location? Because I think it's an important example of providing economic empowerment to people outside of the 5 boroughs. And curious how you guys were set up and how you worked that out. And the corollary question is, do you have any permission from New York State to mine in terms of a bit license, or how you actually set up?
Yeah, first of all, we don't have any type of special incentives or tax breaks or anything from New York State. It's kind of a controversial area. They actually asked us to participate in a program, and because they asked us, we did, and they wanted it to happen, but they got into a few political snafus. That was with NYPA, the New York Power Authority. So, we work, like, I was in NYPA's office in White Plains just 2 weeks ago. They're a great partner. We've worked with some of the political folks. 2 weeks ago, I was also, at a political event in Albany on a panel. So, long story short is we're trying to be the best community members that we can up there. We do employ, a decent amount of folks. I think in the North Country now, our total job count is, in the 60s, something like that, right now, full-time folks.
And the North Country has huge perpetual unemployment problems.
Yeah. So, that's basically, we don't have there to mine Bitcoin. There's no type of licensing you need. It's generally speaking, we're in essence, we're a commercial data center. In terms of the bit license, we do not custody or trade or exchange any type of digital assets. As I mentioned, for instance, with our security token, that's one of the things, one of the many reasons, basically, we choose to operate directly with the pool, because they pay out directly. Those payments never come through us. So basically, we're not like a trading platform. We're not a custody platform. So that's not why we do not participate in the bit license.
My question is, how does Puerto Rico come into all of this?
Yeah, so again, this is getting a little bit outside of my area. So my partner Ashton has lived here for 5 years. He's been Act 20, Act 22 guy for a long time. Our parent company is domiciled here in Puerto Rico. We're currently building out an office. Actually, our office is opening right now in Miramar. So we're going to have a network operations center, developers, admin staff. So that's right here in Puerto Rico.
Great. Any other questions? Okay, so we have a coffee break now, and then 5 o'clock in front, we're going to have a couple of shuttle buses taking us to the party. For locals who have a car here, it's at 1 Calle Almendro, so they do have a valet as well. That's in Punta Las Marias, and so that's the little point that juts out into the ocean between Isla Verde and Ocean Park. And it is the rooftop of the compound that Bo Collins lives in. And so he has generously donated that to us. So we're bringing in all sorts of great food and drink and entertainment. And the chef is going to be, anybody here the first year? I know a couple people maybe aren't in the room. You were here the first year, yes. So it's the chef from La Jaquita Bahia, where we held the first opening party in Miramar, and that got wiped out by the hurricane. He's now doing private events, but my wife was smart enough to hang on to his cell phone number, and so we're going to have a couple of rolling pigs, on a spit, and really great Puerto Rican fare on a rooftop overlooking the ocean. So don't miss that. And again, buses out front at 5 o'clock, or if you want to just drive on your own, there'll be a valet there, 1 Calle Almendro. There's only about 4 streets in that. It's just north of Luitza. Okay, great. We'll see each other out there and then at the party. Thank you, and thank you for your